Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com. Welcome to EnergyRogue.com.
Oh, he's going to say it twice.
Oh, yeah. There you go.
We are who we choose to be.
That guy sounds smart. He knows a lot about us.
I like that guy. I like that.
Whatever
it is, something I never felt before.
Yeah, exactly.
So listen, folks, thanks so much for tuning in. We're going to cover OPEC's monthly oil market report for February 2025. And this is going to be an update format. And what Bill and I are really going to take from this is the commentary and statistics that OPEC is presenting, as well as some of the challenges that that they might have in the coming years. So there's a lot of challenges. Bill and I were just talking about a few of those challenges, and I don't know. Before we dive in, what's some of your thoughts on that, Bill?
Wall Street loves to use confusing terms to make you think only they can do what they do.
Yeah.
That's exactly right.
Hey, good morning. Hey, Richard. Good morning.
Hey, Richard. How you doing?
Yeah.
No, I think there's going to be some real interesting reviews of, everybody. It's sort of like going to back in my day what we called an Amway meeting. You remember those?
Yeah. Multiple.
Yeah, they called it multi-level. That's right. And I had a guy put it to me one time. Says, what's all said and done, somebody's got to sell some soap.
Somebody does.
And somebody does. And that's, I think when we look at all this stuff, we always have to get down and go and saying, well, someone's got to sell some oil. And that's what it boils down to. So the question is who's selling it, at what price, and where are they getting it from?
Well, and also who's buying. So it's not just who's selling, but that's what makes it an interesting dynamic, because you can oversimplify and say it's supply and demand, it's production, it's consumption, and that's it. But it's much more nuanced, and it's part of the reason that we actually will show you a chart a little bit later, one of our favorites that looks at the upstream of the refinery and downstream, because that is truly the entire crude oil market. So that is actually.
And the other thing is, it's all about timing as well.
Right.
I mean, if you don't understand the timing of the market, it sort of ebb and flows, but it's pretty consistent when it's ebbing and when it's flowing.
Right.
The only, and you don't bring on 1 million barrels a day in 10 days. It takes a while.
No.
And so even with the Saudis who we think they can actually turn the spigot, it takes them a while to get all that oil on, because they don't have one well out there putting out 1 million barrels.
So you're telling me there's a chance?
Yeah, that's what I'm telling you. There's a chance.
So listen, lots to digest. We started off the year, we went straight up. WTI, I'm going to reference mainly WTI. I will reference Brent, but if I do, I will call it out. I mainly target WTI for the price point, which we're just over $72 today, and we've had a little bit of price movement. But at the beginning of the year, before Trump took office, we actually went up close to 80. I don't think we got to 80, but let's actually take a quick
I don't know. If we did, we were there for a short period of time, maybe just to print.
I don't think we.
I don't think we.
No,
I don't think we
no,
closed it.
no. We did January 15th. So if you look at January 15th, and for those that track both natural gas and crude oil, 2 days ago, natural gas was in a completely different segment. Look at this.
Yeah,
I went way up. But
that's one of them. I think that's that polar vortex they think about.
after, but we are going to stay pretty focused on crude oil. If you want to ask your natural gas questions, we'll get to those towards the end of the episode. But natural gas basically went up because we have had solid weather, and there is a projection in early March we may be 300 BCF off below the 5-year
5-year
average.
average.
And the reason
Which
that's
to me,
important,
the 5-year average, 5-year average is too low to begin with, in
well,
my opinion.
I know, but add in a year ago, we were over 700 BCF over the 5-year average. So we've almost seasonally corrected a TCF of supply and demand. So that means the demand is really soaking it up. So we're going to stay focused on crude oil today, but there's a lot happening on the natural gas side.
Yeah.
And feel free to reach out to us if you have any
And
questions.
by the way, a shout out to my son who's usually listening. He lives up in
Hey,
Wisconsin.
what's up, Caleb? Yeah.
Hey, Caleb, you need to come down here and get your weather. It's drunk in my front yard. Okay, so come down here and
What
get it and take
Caleb
it
needs
back.
to do, Richard, and Richard, thank you. You always chime in, and thank you, Caleb. I'm going to razz you a little bit. Just throw a comment out there, because then we'll put you up here, and then that way you're going to be in the spotlight. So, but after this run up to 80, we dropped all the way back down to 70. So
Right.
then we've been kind of sitting in this range. Now, what are some of the reasons? Well, there's been tariffs. There's been Russia-Ukraine peace talks. There's been a ceasefire in Gaza. So there's a lot going on, and part of this is de-risking some of the crude oil. However, what we're going to focus on today is the absolute commerce, the buying and the selling of crude oil. And in the monthly market report that OPEC puts out once a month, usually around mid-month, between the 10th and 15th. And this, there were a lot of interesting insights that may tip the hand that we may be looking at a bearish outlook. So,
Yeah, I think that part I'm sort of agreeing with. Now, folks, realize this report's roughly 100 pages long. Brian, I think if I remember right, it's like 110 pages.
let's see. I've got it pulled up. It is 96 pages.
There you
So,
go.
and
And
we pour through
so
this, and it's part of the reason we put this out there as kind of a Cliff Notes version of here's what you should be thinking about, right?
right now, we're also looking for the things that are overlooked in it, sort of just skimmed over because it doesn't fit whatever narrative that the OPEC needs to have.
Yep.
And so we try to look for those too. They still put the data out there, but you have to take a look at it and sort of read it with with your rose-colored glasses sometimes.
Well, so in the report, they did cover the OPEC reference basket, which is a basket of prices, and it rose 8.6% month over month into January. Part of it was that run up, and it was driven by increased financial flows into ICE Brent futures and concerns over supply disruptions. We're going to demystify some of those supply disruptions as we go along. Hedge funds, money managers increase their net long positions, increasing bullish sentiment in the market. However, this is a biggie. Don't gloss over this one. Demand for physical oil remains subdued. Okay. That is important, and that it's reflected on the narrowing spread between spot and 1 month futures for WTI. So,
No, I'm. It's one of those. I'm not sure I believe all those numbers on demand. Because
Well,
if
it
you look,
depends on which source. You could have a 2 million barrel a day difference between one source and another, and they're both. This is what's interesting. They're both technically right the way that they are tracking it. So there's you have to look at who's providing the information and what they're providing and what the context is. So that's
you also have to look to see if they're adjusting their numbers later. Similar like we
yes.
see the unemployment numbers be readjusted. Are they adjusting their numbers later, and how much were they wrong? How much did they need to be adjusted? And so
So
that's the other thing you look at.
well, and one of the things I am going to have an ego moment, and I'm going to say, Astro, if you're watching, thank you. I'm going to do a quick shout out. There was a conversation in our Discord, and
Yeah, folks, what you're looking at is the Discord channel we have for Energy Rogue. If you subscribe at the $179 level, you get access to this. And these are people who are members, everybody commenting on various different things. And of course, right there is our weather map. And so you see a lot of different things going on. And so if you want to understand what's going on in the market, $179 a month, Energy Rogue, Discord channel.
Yeah.
You see there we have Energy Markets and Weather Rogue. So it's
what what we're talking about is data that actually is out there, and Astro was saying, I believe Brian tracks all the data. So we try and put it all into one place. So Astro, if you're watching, thank you so much. Really appreciate you. And lately we've been talking a lot about natural gas because there's a lot of volatility going on. But the demand for physical oil remains subdued. Let's keep on that. So what is the economic growth projections?
with an asterisk from Bill Shanahan.
What?
With an asterisk from Bill Shanahan.
What do you mean an asterisk?
Well, you said it is subdued, but I'm saying there's an asterisk because I don't believe it's subdued as much as they think it is.
Oh, okay. I will
So
say
I'm the asterisk.
I may disagree with you there, but we'll dive into that in a minute. So people love it when we disagree. So the global economic growth projections for 2025 remain at 3.1%, with China maintaining 4.7% growth and India at 6.5%. Those are the exact figures that we have for 2024. Okay, so that currently is showing really a static state, not a growth in percentage gain year over year.
Yeah, but okay. That's a percentage trick. That's a percentage trick.
Well, I guess
if
what
I
I'm
was at
saying is
100 and
that
grew by 6%, then I'd be at 106. If I grow another 6%, it's not just 6. It's
so
6 plus.
if you look at the last 10 years, years 10 through 3, counting down from 10, 9, 8, 7, 6, 5, 5, 4, 3, 2, 1, from 10 to 7, okay, those years, which were further in the past, 10 years ago to 3 years ago, China probably averaged a 8-9% growth rate. I'm discounting
on a smaller economy.
On a smaller economy, yeah. And then the past 3 years, they've moderated quite a bit. So what we have to think about
On a
is
percentage, but on a bigger economy.
that's correct. That's correct. There is absolute growth on the volume, but the percentage gain is slowing down. But here's the thing: when you look at that, our demand, if you compare the same data source, is slowing down. Our rate of growth is slowing down. Now, the question is, will India expand fast enough to offset China's slowing growth pattern?
I'm going to say that it's not as straightforward as that, because as you get beyond I believe the number is $5,000 GDP per person. As you get beyond that, the use of fossil fuels or use of energy and electricity goes up exponentially as opposed to a flat rate. So there's a
Okay.
magic number around that 5,000 GDP. Once you get past that, you start using the society of that society starts using energy at a much higher rate. It's not a flat line. In fact, it's a pretty steep curve.
So it's hyperbolic.
Absolutely.
Okay.
I don't know if it's hyper or super, but it's one of the other ones.
It's more bolic than normal. It's
Yeah.
not normal bolic.
No, I think it's superbolic more than hyperbolic.
So it's not
Hyper has such a negative connotation.
So there's normal bolic, superbolic, and then hyperbolic, right?
Right. Exactly. There you go.
Is that how it goes? Okay.
No, I guess what I'm saying is that that's why it's known. Just we'll go back quite understanding where the demand is, because you could double the demand in Africa and it's going to be big, but it's not going to be that big. The next year, if you double it, it's going to start being huge.
Yeah, that's true.
Because they're moving beyond that number. So
that's true.
That's why it's important to understand where the demand is.
Yep. All right, so let's look. Global projections for economic growth. When we're looking at economic growth because it's highly correlated with crude oil demand. The growth projections are 3.1% for the globe, 4.7% for China, 6.5% for India, 0.9% for the Eurozone. That has been slowing down significantly, and the U.S. economy is set to expand by 2.4%. Again, these are OPEC's numbers per the report. So you can go to different sources such as the Federal Reserve, the Beige Book, which is another book that we actually track and study. And I think these are reasonable projections.
The Beige Book's even more boring than OPEC's.
Oh gosh, you're not kidding. You are not kidding there. So if you want to fall asleep,
it'll cure insomnia.
Yeah. If you want to fall asleep, read the Beige Book or read legal disclaimers. Those are always good. Those will knock you out.
Oh yeah.
I think we may have a link for you down below if you need some insomnia relief.
Yeah.
So anyway, now when we look at economic growth, 3.1%, U.S. economy 2.4%, I think that's pretty healthy. I think that's a healthier place than we were in 2024. OPEC's supply side fell by 118,000 barrels in January to 40.62 million barrels. Non-OPEC supply is forecast to grow by 1 million barrels a day, primarily from US, Brazil, and Canada. That's been the same since last year as far as the sources. And I would say that US is not going to grow very much. They may grow a little. We grew by, say, 200,000. We'll take a look at a real chart here shortly. Canada has been drilling and expanding significantly, and some of that is on natural gas for their Kitimat LNG. Brazil, yes, they've been adding, but a lot of the Latin American growth has been coming from Venezuela, Guyana, and I think this year is going to be a slow start for Guyana, but I think second half may look at something. So evaluating that non-OPEC supply then gets into a headspace of looking at the supply variables. So when we look at the supply variables, the U.S. is one, Canada is one, Brazil is one, Venezuela, Guyana, and the other one to take a look at is any country inside of OPEC and their compliance to their quotas alongside sanctions. So you have to look at sanctions on Iran, sanctions on Russia, whether those will be enforced. There's a lot of aggressive talk on sanctions against Iran. I do not actually believe that is possible unless things get very ugly very fast. And I'm certainly hoping they don't, because I'm an advocate for peace. Please, peace. I like peace. So I like non-military solutions, and those are superior because those value human life. So when we're looking at non-OPEC supply, I don't believe, I believe the non-OPEC supply would fall short of this number, and it would add room for OPEC Plus to add supply. And if those sanctions actually take place, I think the curtailed production from OPEC would fill the space. What do you think, Bill?
I think they could. I think what's happening with some of this stuff is, they've got to get it to market. And so when you start adding a million barrels a day to the supply, just remember, from wherever that's going, that's one ship a day additional to what's going out there right now.
Right.
And that's a VLCC. And so,
and for reference, each one of those ships represent probably 1 to 2% of the global daily supply. So it is worth
right,
1 to 2% of the global supply for a day. One ship
right.
equals that.
So, I think geopolitically, I think the biggest thing that's going to happen is being able to protect shipping lanes. So, to me, that's going to be the big thing. That'll make a bigger difference on it than supply.
Yeah, and I think we're going to have to do a special session on that one, because that gets into
Yeah.
a lot of different trails. So oil prices and market sentiment, the OPEC reference basket increased, crude, Brent crude increased, hedge funds increased their long positions, and I'll walk through that. Actually, we'll go ahead and charge into that. So when we look at the crude oil and financial right here, here's the forward curve. For the remainder of 2025 at $70.50, 2026 is down to 67. So as much as Brent has been increasing, the recent crude oil WTI commitment of traders has been dropping. So they're shortening up their long positions on a net holistic basis. What that means is, when you look at commitment of traders, you are looking north of the zero line or south of the zero line. If it is north of the zero line, that means the net positions of a particular group are long. If it's south of the zero line, it is they are short the market. So trimming those long positions on WTI. So there's been increased positions on Brent, decreased long positions on WTI. I think that could show some tightening between those two, between Brent and WTI. Part of that tightening is because we've dropped a little bit, but what I would say is that it is important to track those positions, especially if you're trading crude oil. And even though the long positions increased on Brent, they've decreased on WTI. So it could be traders moving out of WTI and into Brent. So that's something to look at, which shows a sentiment that we will have a weak WTI and a strong Brent. So which is actually an expansion of that spread. So we'll have to evaluate that. Here's our global economic forecast. Quick shout out to Robert. Yes, it is chilly in South Texas. And the news on natural gas, I don't think you hopped on early enough to see it, but we did talk about this rise quickly, and a lot of it had to do with weather. And in our little system right here, you can see that we have this bottoming out of our global or gas-weighted degree days and
Yes.
a recovery. So that bottoming out, it's
So
cold right now for the next 5 days.
yeah,
Let's
but
see.
no, it's actually over the next 3 days. Then it starts getting warmer, and it gets really warm next week.
But then early March, and I would say in addition to this, we're expected to be 200 to 300 BCF behind the 5-year average by the time March rolls around. Listen, we got a good question, David. Good to see you. Which shipping lanes are in question? For me, it's the U.S. Western sanctions policy on Russia that will decide crude oil supply prices for the next 3 quarters. Global demand growth will be weak. Great points, and I think you're spot on, David. And these shipping lanes. So what I'm gonna recap it, but then I'm gonna pass it over to Bill because he has a more expanded thought process. The shipping lanes, the U.S. has taken kind of a global role in guarding shipping lanes everywhere. They've had naval ships in a lot of different places. And we actually have systematically been reducing that presence, which means it's going to go from a US based naval backing, protecting shipping lanes, protecting pirates, protecting attacks, to a more regional, which means any shipping lanes around the Middle East is going to be really on the bear burden on the Middle East countries, and shipping lanes over in Asia are going to fall on Japan, China, and shipping lanes in the West, the shipping lanes out of the US on exports are really going to be guarded closer to the United States. But the further they get to destinations in Asia, they're going to be relying on those regional impacts. But I'll pass it over to Bill for his thoughts on that.
So, really, the two hot spots is the Straits of Hormuz, which is in the Persian Gulf, and also the Red Sea. That's where we see anywhere from 30 to 40% of the world's crude oil flow through those 2 points. And so they are also very narrow points that can be sabotaged very easily. Now, realizing that some of the people who would do the sabotage, it would cut off some of their money. So far, there's been an economic incentive not to do that. When that goes away, and i.e., sanctions on Iran would be one that could cause some of that. I don't always expect foreign leaders to think logically, but I always think them to think selfishly. And so that's what I usually base that on is how selfish they are. So Brian, you're right. You were right there. Just zoom in on Saudi Arabia.
Yep.
So right there. So you point that, you can see right there where the and by the way, what we're looking at, we're tracking. Is that crude oil ships?
This is crude oil ships.
Okay. And so when you see that, you can see where all that shipping goes in there. And so the Straits of Hormuz is right
they're
up there.
tankers. They may hold LNG.
Okay.
So these are combined.
So right in there, with the Strait of Hormuz, you can see where it's, I think, at its narrowest point, it's only 20 miles wide. And in shipping,
Yeah,
that's
and
not a very wide spot.
actually, when I went there last year, shout out to anybody on Gulf Intelligence. Hope you're listening. We're right here, which is one of the largest ports out of UAE. But the Strait of Hormuz right here is what Bill is talking about. That's only 20 miles.
I think it's only
apart.
20 miles.
Yeah.
And then
So,
the other one is at the base of the Red Sea. So if there was a geopolitical problem, it would happen in those two spots. And I do agree with you, David. It's going to be how the sanctions are enforced on Russia. We know that sanctions don't always Right. I agree with the fact that the Black Sea, but I think the Black Sea is a warm water port for the Russians. That's why that's what all that usually fight is over. So the other thing is that when we watched the sanctions on Iran, we noticed that their production decreased by 1.5 million barrels a day when they had sanctions on them. And so we tracked that as well. And now Russia stopped reporting, so we don't really know what's going on there. But if I remember right, if we go back and look at the old production data from Russia, we see that their
Well,
total
we can
production,
actually see
it's right there in
Russia.
the OPEC report, isn't it?
Yeah, and let me actually go
And I think
here.
what I'm just trying to remember this from memory, so I'll be anxious to see how close I am on my memory. But I was thinking Russia produced about 12 million barrels a day,
Yep.
I think. And but they need about 10 million barrels a day for their own economy. So they're not really exporting a lot of their total production.
So total crude exports from Russia and Central Asia averaged 5.9 million barrels a day in December. That's a sharp decline month over month. So part of that
Right.
may have been winter. On the
And
routes, exports from Russia's Far East port, Aniva Bay, gained 1,000 barrels a day, or about 2%, month over month. But this is why, David, that I referenced. There is so much information inside the OPEC report, and that this is part of the reason that we take a look at it. We are high grading the information because we're trying to pack it into 30 to 45 minutes. Well, we've already done 30. So
yeah. So Iran, the way they did it was using what they call now the Black Fleet. In other words, the ships turn off their transponders when they go in to load up in Iran. They don't turn them back on until they're back out in the sea lanes. And that's been what we've been able to see that.
yeah, but this is what Bill was talking about, where during this time they increased from the production point of 1.9 million barrels a day to over 3.4 under sanctions. So that meant they were increasing their exports. So secondary sanctions really hit hard for now. David, these are great points, and for Russia
And
also have to look at refined products, which we do. We're
and
not
I,
going to
and I
go
think
into
it's they were selling a lot of the stuff to India and China, and it's
yeah.
hard for you to. I mean, it's hard to bully China because really they just don't pay attention to that. India is a different story. We were talking about the um, income per GDP,
Mm-hmm.
and India's is $2,800. So they haven't even started making the curve yet.
They're only in Bollock. They're not in
Right?
normal Bollock.
Yeah, they're
So
not normal. They're not even a normal bollock yet.
so
And so
I'm
that's where it could happen as far as demand. But I mean, it's hard to get a country that size from 2,800 to 5,000.
yep. So listen, just a quick break. Brian and Bill with Energy Rogue. You can learn a little bit more from us at energyrogue.com. We offer two products, two subscription-based products. One is Rogue Radar, which gives you access to our 2 weekly videos, along with 2 reports that set up the week. One will give you insight as far as the pivot points, what to watch for during the week, and then the other is our Rogue Radar, which gives you convenient red light, green light signals on natural gas, crude oil, as well as narrative on what is happening during the week. We we pour over these reports and these things to save time. We were spending 30 plus hours a week trying to find information like this. So we put all of this into an $89 a month package where you get a Monday morning video, Monday morning PDF, and later in the week when data is released, we update Rogue Radar along with a video that kind of covers that. For those that want to take the next step, Rogue Edge has our institutional level institutional level platform that has interactive downloadable charts that you can get in and actually run analysis on trends, and you can actually go back in time, and all you have to do is just click the axis around. You can take a look at Canadian imports, LNG imports, dry production. Then on the demand side, you can get into an individual trend analysis on electricity, on LNG, on Mexico exports, so that you could actually create charts that give you this version of what has actually happened over time. And then you can actually see, well, what happened during COVID? You can answer that question. This is $179 a month. That gives you access to the dashboard, gives you access to our AI, which is an energy trading strategist, technicals, and our Discord channel, which we featured earlier. So did I miss anything there?
Whoa! Wait a minute!
What was that price? Only $89 a month or $179 a month?
Yeah.
Well, that's almost cheaper than Starbucks.
So you can learn more at energyrogue.com. And David, thanks for stopping in. I hope you enjoy the rest of your day. So let's get back to the economic forecast of 3.1% for the world GDP. Economic forecast for the US is 2.4. China is 4.7. All of these are showing positive growth. I'm curious if these are going to change significantly with the tariffs.
So let's talk about it. Go back to that real quick, because I'll give you something just off the top of my head. The U.S. economy is $27 trillion. So we're talking about 2.4% growth on $27 trillion. China is 4.7 growth on $17 trillion.
Okay.
And India is a 6.5% growth on $3 trillion. So when you start looking at the absolute numbers, while the percentages are high, they're high on a much lower number.
Right.
So that's why China's so important, because it's the next largest economy besides the US.
Yeah. 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 Well, and I think in a few years, I think we're going to be talking about India that way.
Yeah, I think so too.
All right. So here's what the oil demand looks like globally. We're looking at 1.4 million barrels a day of growth, and most of it is in non-OECD or what does that stand for again? OECD. It's like
it's the
economic. It's kind of advanced economies versus growing economies.
Right.
So
exactly.
that's I forget the acronym. If you got the acronym, drop it in the chat below. Oil supply, OPEC crude output fell by 118,000 barrels a day in January. Part of that is probably weather. Non-OPEC supply growth, it's projected to grow by over 1 million barrels a day in 2025, driven by US, Brazil, and Canada. US, I'm taking the under. Brazil, I'm taking the under. Canada, I think they'll meet expectations, but there's two other countries that they don't have listed here, Venezuela and Guyana. I think they're going to pick up the slack. I think the 1 million barrels a day is right, but it's just not the right time yet. So,
or the right place.
Right. U.S. production continues to increase, with rig counts rising for the first time since December 2023. I'd water that down. The rise has not been significant. It's been only a smattering. So,
and I think it was done in the fourth quarter to raise stock prices.
Yeah. Yeah, you're right.
Or protect stock prices.
Steve, I knew I could count on you. Organization for Economic Cooperation and Development. Thank you, Steve. Appreciate you.
Well, that sounds like something Steve would belong to, I think. Hey, Steve, hope you're doing good, bud.
He's organized and economic, and he cooperates. Case in point.
Well, for the most part. Cooperate might be the hard part for him.
And he helps us develop the thoughts. So Steve
there you go.
is the center of all that. So thanks, Steve.
And if you want to know anything about CO2, then reach out to Steve. He's got it down.
Oh, yeah. LNG exports, the demand has reached record highs. However, there's probably another B to 2 BCF of export capacity that is unutilized. Okay, inventory and stock movements. I'm gonna let Bill.
This is your favorite. This is
talk
your
ab-
favorite, isn't it?
I'm gonna let Bill talk about this one. So, tell me what I should be concerned about here.
Well, I think, like I said, you got to watch both sides of the refinery, right?
Right.
And so when you're doing that, you got to understand not just what's coming in on the crude oil, but what's coming out on the other side. It's sort of like looking at the OPEC numbers. The OPEC numbers, when they talk about crude oil, well, it's not. You have to make sure they're really talking about crude oil because they keep their NGLs in those liquids numbers, and that's usually it's not a lot, but it's usually about 500,000 barrels that
Right.
they keep, and that's how they look at crude oil as a liquid. So if they got NGLs in there, that's what. So you have to sort of watch that number a little bit. In these commercial stocks, what happens is that if you don't isolate them and understand what market they're going to, it's hard for you to understand the other side of the refinery, which is the refined product. Realize that most refined products are involved in the petchem industry of some sort. A little bit in heating, propane goes to heating, ethane goes in plastics, butanes get involved in the plastics, and then you have the natural gasolines, which actually helps out refineries sometimes.
This is why we have this chart
So,
for the U.S. This is crude and products. This is total
and so
stocks.
when you take a look at that, you can see we're down below the 5-year average. If I'm reading that right.
So yeah, let's go back in
And so,
time, and let me take off the 5-year average. So here's the five. Well, here, yeah, I took off the min max. So you could see that we actually had a pretty solid,
growth.
pretty solid base case right here of 1.8 million barrels billion. I think that's billion. Until 2022, we started going down. Now, what is significant about 2022? We had high inflation and
Right.
interest rates were skyrocketing. So there's an economic incentive to actually keep stocks relatively low. But we are in a new tier to where if we have supply side risk, I think there's going to be a rapid increase in crude oil prices because of the lower stocks. So,
Or there should be,
or there should be,
based on the past.
or there should be. Yeah. Um, okay. So, the U.S. crude inventories, again, we take a look at not only the crude inventories, most of the market has a hyper view on commercial crude stocks, but we look at commercial crude stocks, SPR, and the product stocks because that gives us a comprehensive picture of what's happening. Right, Bill? I think we're saying the same
Right.
thing, different words.
Right.
Um,
Exactly.
and this is where some of the inventory and stock movements globally, this has showed bearish indications. However, the U.S. has not shown those bearish indications, which means the U.S. might be in a better spot.
Yeah. And
But
if you look at that, you notice they sort of cherry picked their number there because they pulled out. They stopped before they got the 2020 pandemic when they were calculating their average.
oh yeah. Let's see. VLCC rates are up 38% month over month. Suez Suez Max are declined by 11%, and U.S. crude exports, which we actually track right here on this every week, where we take a look at the imports and the exports, and we put them in this nice graphic so that we could see it visually. So,
So does everybody understand what the VLC is? A very large crude carrier, and Suez Max is another size of tanker. It's not as big as the VLCC, and so what they do is those
intended
rates do that.
It's intended to go through this channel. That's why Suez is in the name.
Right.
And so
And so it's all about the
sized
draft.
appropriately. Yeah.
It's all about the draft. A lot of the VLCCs have to anchor offshore, and then they will
Well, what some of them
lighter.
do is they actually park it right here, and then
They
it
lighter
is,
a supermax to other
well,
places.
they go on a pipeline, and I think, does that go to Alexandria or does that go to this port?
I don't remember the pipelines over there.
So there's one in Egypt, and
I'm learning to forget them.
all right, China crude imports averaged 11 million barrels a day in 2024, but are showing signs of slowing. This is what we've been monitoring on a month-over-month basis. And the main takeaways that we want to cover today: oil market remains volatile. Price gains
Right.
are driven by the geopolitical risks, this goes with tariffs, peace talks, and conflict. Economic forecasts are stable, but risks from trade disputes and monetary policy shifts could weigh on demand. OPEC and its allies continue to manage supply levels, while OPEC production is expected to rise. Oil demand growth is steady, but heavily reliant on China, India, and other non-OECD countries. The tanker market remains mixed, with VLCC rates strong, Suezmax and Aframax are headed down. So what lies ahead? It's pretty uncertain. Here's some of the bullish factors. OPEC supply cuts. If they keep those supply cuts for longer, they are expected to slowly unwind those during 2025. I would be looking at the next OPEC meeting to really decide what is happening there,
Yeah,
because they are
I think that will,
absorbing.
if it happens, it's going to happen in fourth quarter, I think.
Yeah. Right now with the
And
price
I
where
think
it
it'll
is,
happen with the wild card on that is United Arab Emirates, because they have more. Their percentage now is lower, so they are lobbying to be able to ship more.
yeah. Geopolitical risks, disruptions from Middle East tensions, including Houthi attacks on shipping routes. That's going to be key. LNG demand continues to be strong. On the bearish side, U.S.-Russia peace deal that is in talks right now. I'm skeptical
Okay, so
unless
wait a minute. No, so let's talk about that. What you mean about that is the peace deal for
Ukraine,
Ukraine. Yeah, we're
but the
not
way,
in,
but
folks.
it's
We're not in a war with
negotiating.
Russia.
Yeah.
We're not in a war with Russia. It's a peace deal for Russia, Ukraine.
Yeah.
Okay, just want to make sure everybody understands that we're not in a war with Russia,
The Eurozone
or
economy,
at
watching
least
that.
that's what. Well, we just say we're not in a shooting war. Let's put it that way.
Yeah, there's a lot of economic wars that are actually happening.
Right.
What a Eurozone economy remains sluggish, impacting refined products and weather demand in Q2. It is expected to be warmer than normal, but given how we're dealing with a lot of cold right now, I'm curious if that's going to hold up.
I think the
So,
Eurozone too could be the one that comes up and sneaks up and sort of bites you in the butt if you're not careful.
So if you are listening to this and you would like to understand a little bit more about energy commodities, and you are needing assistance on understanding the markets from a fundamental and a technical perspective, just navigate over to energyrogue.com. Your choices are threefold. One, you can ignore all this and just look at technical charts. Two, you can spend 30 plus hours a week in research. Three, you can spend $89 a month and get 2 reports, 2 videos a week. And then for those that are super, super serious, $179 a month gives you access to everything. And we have multiple traders from around the world that have said, you need to be charging 10 times that, but we want to bring it to everybody so that you have the tools that all the big boys have access to, so that you can trade alongside them. You can hedge and manage your business. If your business depends on the value of crude oil, the value of natural gas, the value of natural gas liquids or refined products, you do need to spend
And
some time researching this, and we could be a
by the
solution
way,
for that.
most likely it does. You just may not know it yet.
Yeah. Yeah. That's yeah. That's what it's all about, right?
Right. It's all about bringing.
I'm Luke Skywalker. I'm here to rescue you.
So listen, I think that's all we got. Is that all we got?
I think it's all we got. I just, it's a cold, clear across the nation right now. Natural gas prices are high. I saw some local NG prices here in Oklahoma above $7, and so it's going to stay there for a few more days, and then in a week we'll be back to springtime. So
Yeah.
welcome to the crazy land of Oklahoma.
That is definitely true. So listen, folks, thanks so much for tuning in. Drop us a comment. Let us know how we're doing. Let us know what you want to hear about, and really appreciate you tuning in. And I think that's all we got. So
Yeah. Thanks for your comments, folks.
enjoy your day and be safe, be kind, and be considerate. So follow those rules. Just be a good human. So thank you so much, and we will see you next week.